Hello folks, I'm LA Little and this is your weekly NeoTA Wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves what happened last week, what does it tell us about the coming one? I do this show every week live at 9 o'clock Eastern Time and archived on YouTube. You can find me there, of course, under my name, LA Little. Shows are archived shortly after a broadcast. You can pick them up there. Also do a show 4 times a week throughout the weekdays. Of course, you want to catch that. The weekend show, the Sunday show, of course, we're trying to look more at the long term versus the short term. And so let's start there. Let's start with the markets and what happened last week. Now last week, as you can see here, markets were fairly flat, up slightly. And on a weekly basis, on the S&P 500, you actually got an under over. So you got back underneath the prior bar, back over. It's not extended, so that, doesn't carry as much weight in terms of, it's going to definitely bounce. But it is an indication of the potential for a bounce because you went under, you didn't have as much volume, and the buyers ended up taking control. In this case, it's a doji. So a doji can be a halfway market. It can actually be a reversal. We don't really know that. What we do know is it came into support, it held support, and that's about all we know, right, on a weekly basis. If we look at it on the daily basis, if we come back over here to the daily, if you remember last week, the markets became very hard to read, and what was difficult is that they were showing us each time that they were going to try to bounce on, let me see, it was Tuesday and Wednesday. And so if we draw here that low, if we draw across, this low that was made, remember we had the big spike down on this bar, and then we had kind of a doji spike down after that. A little bounce up, then you come back down, you test, right? This was the test here. You test it, you don't have as much volume. That says you're going to try to bounce, and that's what it tried to do. And then, of course, it came right back down. And then it tried again the next day, and then came right back down and actually closed on a new low. That was 2 days running where it should have bounced and it couldn't and didn't. When I see that kind of indication, right, something larger is at work. And whatever that larger thing is, I have to respect it without knowing exactly what's driving it and how long it will do it. And in this particular case, we could certainly make the argument that what was driving it was the news flow out of Ukraine in particular. And so Friday, when we got a little relief on that news flow, meaning that there was indications that Russia was toning down what was going on, then on the ground, then we might actually end up getting a bounce, and we did. Now that bounce has taken us back into the top of this swing point low, and it's actually slightly over it. So we're slightly over it. What is that? That's the retest regenerate zone. The bottom of this bar, the top of this bar ended up being fairly critical the way they were situated. Friday's push took us right up into that bar slightly and just over this retest regenerate bar, the bearish one. And that says that this thing may move on up. And Monday will be a critical day from that perspective, because if it does, then it's going to come back and it's going to retest again on this bearish retest regenerate, because remember we broke 4 swing point lows as we came down. One after another, they all broke, and it was a pretty ugly scene. Actually 5, right? Because we ended up breaking the last one. That's a pretty steep move down, fairly fast move down. Now we're coming back up. After a steep move like this that overruns its targets, and what I mean by that is the ABCD structure, the first one on the way down, easily overran. In other words, it was more than overdone when it finally finished down here. Get a bounce. Now you have another ABCD structure that has set up that wants to take it even lower, but that will be nullified if you can get back over that retest regenerate zone, and that's going to be a key one. Can you get back over here? Can you get back over there? If you do, that pretty much says that worst case you're probably sideways for a while. If you don't, then you got the potential to plummet on back down again. So as you can see, you got the first one, you're up against it. Looks like it's going to try to get over it, but volume did tail off on Friday. It's summer, you know, there's not much volume to begin with, but the key one will once again be this 1943.35 area on the way back up. That's the S&P on the weekly, on the daily. If we look at the NASDAQ, and here we're looking at the composite. On the composite itself, you actually have not as bearish a situation as you have on the, well, not as negative, I should say, a situation as you have on the S&P 500. This one did transition right here on the Thursday bar, transition to bearish. It's trying to come back up now to test, and that retest regenerate in this particular case really has 2 bars of significance. And if it gets back over these, then that clearly is sideways, right? Which means you can go back to the highs, and you're trading this range and this range. Right now it's going to try to come up and get back over into the higher range, which would break the bearish retest regenerate and push it back into a sideways trend instead of a bearish or a potentially, well, it's already bearish on this time frame, but potentially something larger on the longer term time frame. And if we switch to that, what we really have going on here again is a retest regenerate, and it's been going on for about 4 weeks now, 5 weeks actually. That's trying to regenerate higher. It came down with decent volume the week prior. This week really didn't. It was an inside bar this week, so it didn't really do anything. And I think if I remember right, those highs, 4485.93, yeah, those highs held, and those highs had volume, had no volume on them. So you got a high with no volume on it, you come off with a little bit more volume, you go back up, you try to get to the high, you can't, and you come off again with even more expanding volume. That's not a particularly good situation in that you can't break out and continue higher. Now mind you, these markets at this particular point, they can go either way. I mean, there's nothing to stop this from being an ABCD structure higher. And if this does break out, that's what you have to start thinking. This and the NDX have been the strongest ones, and that is where you want to look if this market does continue higher. So if we look at the NDX, you kind of got the same situation here, a little bit stronger. It's only in a sideways trend, not bearish, but again, it's going to have a retest regenerate zone, just like we saw on the NASDAQ. That zone's going to be here, and then of course you got the breakdown bar there. That's the key. You get over that, you're going to go for the highs again. And so as these things bounce, if they actually bounce that far, these retest regenerate zones are going to be critical, especially on the stronger indexes, right? The S&P could trade up and over it, and you still don't get over this one. And that would still be, you know, divergence then the other way. Right now you had divergence here where this one was stronger. If you go back up and the strongest one can't lead, then that's a pretty good indication that you might get something else. As I started the show, I talked about the fact that it was news flow. News flow is going to drive this thing this week because your earnings are done. I mean, there's a few more, but they're basically done. And they've been good. Yet we sold off anyway because we'd already ran up into earnings. I mean, look at this run. You know, you got to think that had something to do with the expectation of earnings being better, right? So you get a nice big run up, you sell off a little bit, and at this point, it's just an ordinary sell-off. There's nothing else to it. Could it turn into something more? Sure it could. And matter of fact, in some ways you kind of like it to, because it'd be very nice to reset these extended MTTFs, the mean time to failures that we have on these trends, because they're way beyond anything rational at this point. But you know, sometimes the market is totally irrational and it just keeps going, and that's what this one has done. And that's why they're just guides, they're not signals, right? They're just guidelines. So weekly NDX looks pretty good. If we go over and look at the Russell on the weekly, now the Russell has been a very weak index, but on Friday the Russell, just like the S&P 500, it got right up to and just over, and I didn't draw that quite correctly, but it got just slightly over that retest regenerate zone, and this is the lowest one, and then if it gets over it, of course, then it comes into the highest one. But on the Russell, this is pretty tough because this is the breakdown bar with significant volume on the way down, and so the Russell's coming into that area. This is going to be kind of the key area. You see the red resistance zone that the TA Today charts have drawn in there. That's going to be hard to get over. If it gets over it, you know, then it can retest all the way up to here. So the Russell, another one that you know, I'll keep my eyes peeled on, because the Russell has been one of the best indicators most of the year. On the weekly, you've got really nothing happening here. I mean, you're in two, you know, most of these you can actually look at them as large ranges. You've got a large range here, and then you've got one up underneath it. And it's just trying to get back up into the top of the lower range. Double top test, right? Double bottom kind of stuff. These are all swing point lows, all waiting to get broke if this thing does break to the downside. But right now, we don't know that. And because this is a weekly, this could play out for another 2, 3, 4 weeks. It doesn't have to be over this week. If you look over at the sectors, most of the sectors look about the same. We have retest regenerates going with most of those as well, and so in general, you know, the sectors are kind of supporting what you're seeing on the indexes, and that is that they certainly have the potential to bounce, but if the news flow turns negative, they certainly have the potential to go down as well. So until we get a little farther along and we see whether these retest regenerates are going to generate lower or not, you just have to, you know, kind of have a hands-off approach, do a little less than you normally would and wait, because that's kind of the way this thing's set up. Now over in Europe, we've got real problems. The problems continue. They're due, more than due, for a bounce. They've done nested, this is on the daily, I'm looking at the CACs. They've done nested ABCD structures all the way down, right, one after another, and depends on how you want to draw them here, but I'll just take the larger of the ones. You can see how these have completed out. You got another one, it completes or hasn't completed yet. That one can go lower. And so just one after another on the way down. Fairly bearish action on the weekly, same sort of thing. Pretty bearish action in here. You've also finally got the ABCD structure here that can take it down into these lows. So Europe right now is certainly not indicating that the worst is over. And if you remember, the CACs itself was the first one down, extended 2 to 3 bars, and actually it's 4 bars now on the downside. The DAX, which was the stronger at the time, now has become the weaker given the Russian situation and all the sanctions that are starting to take place. This one also doing nested ABCD structures, actually not nested, but just ABCD structures on the way down. This one actually has a couple of nested ones. You got one here, you've actually got this one that take you down too, but as you can see, these have extended farther, way farther than one would expect, right? And so this has turned very negative with what's happened in Russia and with the sanctions. got a break of a swing point low here. That low, when it breaks, that's multiple time frames. That says it's going to try to extend 2 to 3 bars. Bar 1 is in the books, bar 2 is coming, and then 3. So whether it extends down below these or tends to hold here and go sideways, it's already done enough damage to most anyone that's in it with a 10% drop off the top. Asia doesn't, of course, look nearly as bad. Matter of fact, Asia kind of wants to bounce again. But with the rest of the world struggling, I suspect Asia is going to struggle on the bounce. So in other words, what I'm thinking is as this thing starts to approach these highs again, you're going to see some resistance and some selling into that. In particular here, this little zone up here is going to be probably a pretty good resistance zone once this thing starts to bounce. And that's also true not just on the Shanghai shares, but also on the Hong Kong shares itself. Same sort of scenario. Yeah, it's got volume at the top, but as it comes back up there, unless the rest of the world starts picking it up, I suspect they're going to sell it when they take it back up to the top. Nikkei getting hurt by the yen. That one comes all the way down. Test doesn't have quite the volume. 172, actually it did, 177, I thought it was lighter. So it actually hits the bottom with some gusto. So if this one gets a bounce, you can expect it's going to try to come down and do it again and try to break it out. Korea is actually holding up a little bit better, just like the Hang Seng shares. Some decent volume coming down here. Retest regen will kind of be the key. You know, does the volume dry up as it comes back into this area? This is the first time back now on a retest regenerate off these prior highs, and so that's going to be kind of the key area. It almost got there on Friday. So in summary, you've got markets that are news flow driven. The fact that we don't have much more in the way of earnings isn't going to hurt or help. The fact that we've got Ukrainian situation which doesn't look like it's lifting yet, that's going to be a negative news flow probably, and like Friday, potentially good news in that we think it's going to get better. And so that's going to gyrate these markets around. The other thing that could happen and may happen is you've got some economic news and you got a lot of Fed speak this week. And so those are the drivers this week. I wouldn't focus that much on the technicals until the news flow quietens down and the technicals then catch up and start giving us better reads. Okay, so if we dive in a little bit deeper here, for those that want to see a little bit more detail, let's pop over to the OX markets because I want to talk a little bit about gold, silver, the bonds, and the dollar and the currency market. So I want to start with the emerging markets first. And the reason for that is the emerging markets. Now, this is, you know, people tend to think of emerging markets as really Asia, but it's really not Asia. It's much more than Asia. It's spread out with some of the Middle East, a little bit of Africa. So the emerging markets is broader than just, right? This is broader than just Asia. This came down, does an ABCD structure on the way down. So you come down, you get a pretty nice bounce, you come back down and you finish it off here. Now it's getting its bounce. Is this bounce simply going to set up another potential move down, or is it going to set up something a little bit higher? Well, we got somewhat of a clue here. As we know, we're kind of discounting the technicals a little bit right now, but you got some sort of a clue in that you came back to do a retest regenerate and you failed. So the highest high failed to hold on a bullish retest regenerate. This should have bounced out of here but didn't. So just like we saw failures last week in some of the other technicals, this one did the same. If you draw the second retest regenerate, that one came down and tested right to the bottom of it. Volume was heavier. That says it's probably going to come try and do it again. So I wouldn't be surprised to see this thing bounce up into this area, fail, and come back and try to set up an ABCD structure to the downside. And that will kind of be the key. And I would expect, and if you want to do the range type trade, I would expect this range and the lower one now to probably hold price action for the foreseeable future. If you look at it on the weekly, it doesn't look nearly as bad, because there you're simply coming back in to do a retest, regen. But when you come back within 6 bars, you can go all the way to the bottom of the bar. So when you look at that bottom, you know, where is it? Well, that bottom is 42.47. And if we switch back over here, 42.47 gets you up underneath this area into this big bar. Top of it's 42.92. The top of that, the high of the low bar, 42.73. So you can see it could come all the way back down to this area and still be bullish on the intermediate term time frame. So right now it's important that you look at all these time frames, which of course is why we do this show. Okay, let's look over at gold, because gold has been trying to make a move higher, and gold has been stagnated by that big range bar from back here. Remember, we've had some breakout stuff on the top, some breakout stuff on the bottom, but most of the action has been inside that, and that's typically what happens when you get a wide price spread, high volume bar, and it's a big wide price spread bar like this one is. It tends to hold price for a while. When it breaks out, and what I mean by that is when you get a break over a high or a low, right, at these extremes, it's going to be a larger move. And when we look over at the weekly still looks to me, and I've been saying this for quite a while, that it's trying to set up an ABCD structure to take it higher and actually go test this high, try to break it out. And that was a wide price spread bar, wasn't high volume. If it gets up there and it actually takes it out, and then you look over here, you could actually turn this thing bullish on an intermediate term time frame, and we haven't said that in a very long time. We're talking 2.5, 3 years now. So maybe gold is starting to sniff out the potential for inflation, given that Yellen really wants to be accommodative, and at the same time we're seeing these markets start to discount the possibility of interest rate rises due to inflation pressures, even though the Fed isn't saying that they're going to stop it. And right now the market just doesn't know. Gold seems to be trying to suggest that this market or that the interest rates themselves aren't going to go up, they're going to stay low, and gold's going to be the one that skyrockets, or actually pushes higher. I don't know why skyrocket. Same thing here, high volume, wide price spread bar. This is silver. You got the same scenario here. Now silver didn't hold price as long. If I take it all the way back actually to the breakout, it got over the top for quite a while, and now it's drifted back in there and it's testing the bottom side of it. But this looks like a big range trade too, and when I put it on the weekly, it's not as bullish as gold, but so far it's still potentially an ABCD structure to the upside. The dollar got up to the top, tested the highs twice, failed, comes back, has less volume, flips around, does a little bit of a hammer. This looks like it's going to hold in here. And if I look at the euro got a nice bounce. I don't know how far the euro is going to carry though on a daily. It's got this big bar to deal with on the way up, and it's got a long way to go to get back to these swing point lows. You're talking about extension. That was extension. But this will be the first test on the way up. That tops 132.61. If you look at it on the weekly, you actually had the break of the swing point low. That says you're going to get 2 to 3 bars extension. That's what's happened. But there are long tails on them. That suggests to me that this thing is going to try to get back up here, more than likely, because it's still holding this swing point low. It's going to get back up here and try to test into this area. I doubt it's going to get all the way to the top, but test into that area. That area is about a 133.50, and if you come back now to the daily, 133.50 takes you where? Right back into that swing point low. So even though it looks like a long way up, it looks to me like it might actually get back up there. So if the euro goes higher, that tends to be not good for the eurozone in terms of equities. It historically, at least in recent history, has been good for gold. Weaker dollar has been good for equities in general, but lately it hasn't mattered. And so you have this confluence of indicators that really are pointing different directions and not really giving us great clues. So when I see that sort of stuff, I just try to forget the relationships to some extent and really focus on the individual markets. So if I'm looking for trade setups, I'm trying to ignore everything else that's going on and simply play the FXE chart by itself or play the gold chart by itself and just try to trade off of what it's doing. And in all those cases, I trade a little bit smaller than I normally would until these indicators start lining up again and until the technical picture really starts to act like, you know, in other words, if I think it's going to do this or do that, then I want to see it do this or do that. Otherwise, I don't trust it as much. And right now, I'm not trusting it nearly as much. Okay, I think that's a pretty good overview. Let me see if I have any questions. If you have questions, you can shoot them to me. You can email me, support@tatoday.com. You can also text them, 303-912-9110. I can pick them up in either form, or if you want, you can type them in to the live stream chat room. And I don't see messages here. And I had one earlier on the email. Oh, that's a subscriber wanting me to talk about something in the morning on the morning broadcast. Okay, so I'll deal with that one in the morning. Okay, well, no questions. I'm going to leave it at that. You know, there's a lot of news flow this week, or will be, and it's really going to whip these markets around. We've got thin, summer type trading that tends to exacerbate it. We've seen a lot of volatility lately. I would think that volatility narrows for a while, a little bit, right? But you're going to get a lot of jerky action even with it narrowing some. And then at some point, I would think, you know, somewhere over the next 2, 3, 4 weeks, and I'm going to come back to the S&P chart right quick. I would think that somewhere over the next 2, 3, maybe 4 weeks, and let me grab this chart, over the next 2, 3, 4 weeks, either this is going to break out up here, right, which means you're going to be shooting for 2,000 again and have a good shot at it, or this thing's going to break out to the downside and you're going to be trying to break out these swing point lows on an intermediate term time frame, which could lead to a much larger move to the downside. So, you know, in between, I would not be surprised to see this thing doing this. I don't know that it's going to go that high, but I would not be surprised to see it trading sideways over the next 2 to 3 weeks until, you know, it builds up enough steam to break one way or the other. All right, I'm LA. That is, and it was your weekly TA wrap. Have a great one, and check me out during the week. I'll see you then. Take care, folks. Good night.